Happy Friday, Brian Manny here with the weekly update. Let's get right to it. So, a lot of Fed talk this week. We had Jerome Powell, President of the Federal Reserve, speaking on Wednesday and Thursday. Pretty much came out and reassured us that there will be a rate cut at the end of July. So some people are speculating, this is a wild speculation, 0.5% rate cut. We really think it's going to be more like a 0.25% rate cut. So one thing I do want to say is make no mistake that just because the Federal Reserve cuts rates 0.25%, that does not mean that mortgage rates are going to go down 0.25%. The Federal Reserve controls what's called the Fed funds rate. Mortgage rates function really more off the bond market. It's quite possible that the Federal Reserve could cut rates. Bond markets are going to listen to what they say, and I've even seen mortgage rates go up on the same day where the Federal Reserve cuts rates. So what's really important is what the Federal Reserve says on their next meeting July 31st, not what they do, and that's what's going to impact mortgage rates. So I get a lot of people calling me, hey Brian, I want to refinance, but I'm thinking about holding off till the end of the month because I hear there's going to be a rate cut. Don't take that approach because a Fed rate cut does not mean mortgage rates are going to go down. Thursday this week we get CPI. So this is the Consumer Price Index. So we look at CPI, which we really think is the most accurate gauge of inflation. If we look at the core rate, so the core rate strips out the volatile sectors of food and energy. And the reason why we do like CPI the most is because it does include cost for out-of-pocket medical expenses and housing. We've talked about this a lot. And the core rate for CPI had inflation going up from 2% to 2.1%. So not a giant move, but certainly a tick up in inflation. So we really wonder, the Federal Reserve, for example, looks at the PCE, that's the personal consumption expenditure. If the Federal Reserve looked at the CPI and they watched this tick up in inflation, would they really be so gung-ho to cut rates here coming up in the end of July? The reason why I say is because one of the main jobs of the Federal Reserve is to watch out and to curb inflation. And if we're seeing inflation come up through the CPI, maybe they should think about cutting rates. So I don't know, we'll have to wait and see what happens. Also, we got rent data. So for quite a while, rents have increased on an annual basis at 3.5%. Now CPI shows us that rents have gone up on an annual basis of 3.9%. So we're just seeing rental costs go up and up and up. Really great case to look at buying a house. So if you want a rent versus own analysis, we can do them for you. If you're a realtor, you want them for your clients, just give us a call. We'd love to help you out any way we can. I'm around all weekend. Love to help you with any way I can. You got any mortgage questions? Need a pre-approval done? Give me a shout. We're here to help you. Happy Friday. Have a great day.